The world economy is a ship sailing through unpredictable waters. Inflation is high, interest rates are rising, the financial landscape is fraught with uncertainty, and the waves of economic instability are crashing against the hull of global markets. Every day brings new challenges, and the horizon is clouded with the threat of further turmoil. Investors and everyday people alike are feeling the pressure, searching for ways to safeguard their assets and secure their financial futures. The threat of recession looms large. Economic indicators are flashing warning signs, and the specter of a downturn is ever present. Businesses are tightening their belts, and consumers are becoming more cautious with their spending. The fear of a prolonged economic slump is palpable, and the need for stability has never been greater. In these uncertain times, investors search for safe havens, for assets that hold their value when others falter. The quest for security leads many to consider various options, from traditional stocks and bonds to more unconventional investments. The goal is to find something reliable, something that can weather the storm and provide a sense of assurance amidst the chaos. Gold and silver, throughout history, have been those havens. These precious metals have stood the test of time, serving as a store of value for centuries. They are not just commodities, they are symbols of wealth and stability. In times of economic distress, gold and silver often shine the brightest, offering a refuge from the storm. They are the shiny objects that have offered stability during times of economic turbulence. When markets are volatile and currencies are devalued, gold and silver maintain their allure. Their intrinsic value and historical significance make them attractive options for those looking to preserve their wealth. They are the tangible assets that provide a sense of security when paper currencies lose their purchasing power. Unlike digital assets or fiat money, gold and silver are physical, tangible items that you can hold in your hand. This tangibility adds to their appeal, especially in times of financial uncertainty. But are they the right investment for right now? The financial landscape is ever-changing, and what worked in the past may not necessarily be the best option today. It's crucial to weigh the pros and cons, consider current market conditions, and seek expert advice before making any investment decisions. That's what we'll explore in this video. We'll delve into the intricacies of investing in precious metals, examining the factors that influence their value and the potential risks and rewards. We'll dive deep into the world of precious metals, examining the pros and cons of investing in gold and silver in today's market. From historical performance to current trends, we'll provide a comprehensive analysis to help you make an informed decision. We'll look at costs, compare investment strategies, and analyze historical trends to help you make an informed decision. By the end of this essay, you'll have a clearer understanding of whether gold and silver are the right investments for you in these turbulent times. Before you buy your first ounce of gold or silver, you need to understand the costs involved. Just like any other investment, buying precious metals comes with fees. Brokers, dealers, and even banks will charge you a premium over the spot price, the current market price, of the metal. This premium covers their costs and profits. Make sure you shop around and compare prices from different sources. Negotiate the premium, especially if you're buying a significant amount. Don't be afraid to walk away if you don't feel comfortable with the price. Remember, every dollar saved on fees is another dollar invested in your financial future. Now let's talk about how to actually own gold and silver. In today's uncertain economic climate, many people are turning to precious metals as a way to safeguard their wealth. Gold and silver have been trusted for centuries as stores of value, and they continue to be a popular choice for investors looking to protect their assets. You have two main options: physical metal and paper assets. Each has its own set of advantages and disadvantages, and the choice between them often depends on your personal preferences and investment goals. Physical gold and silver mean you hold the actual coins or bars in your possession. This can be incredibly reassuring, especially in times of economic instability. When you have physical gold or silver, you have a tangible asset that you can see and touch. You can touch them, feel their weight, and sleep soundly knowing they are under your control. There's a certain peace of mind that comes with knowing your wealth is stored in a physical form that isn't subject to the whims of the financial markets. This is particularly appealing during times of economic crisis, where the tangible nature of these assets provides a sense of security that paper assets simply can't match. When the stock market is volatile and unpredictable, having physical gold and silver can be a comforting hedge against uncertainty. Paper assets, on the other hand, represent ownership of gold or silver without physically holding the metal. These can be more convenient and easier to trade, but they come with their own set of risks and considerations. These include exchange-traded funds, which track the price of the metal, and futures contracts, which allow you to speculate on future price movements. While these financial instruments can offer liquidity and ease of access, they don't provide the same level of security as holding the physical metal. While these options offer convenience and liquidity, they lack the tangible security of physical gold and silver, especially during a recession when markets can be volatile and unpredictable. In such times, the physical presence of gold and silver can serve as a reliable anchor, providing a sense of stability and peace of mind that paper assets simply cannot match. Many investors wonder if they should put their money in gold and silver or the stock market. This is like comparing apples and oranges. Both have their pros and cons. Stocks offer the potential for higher returns over the long term. They represent ownership in companies that can grow and generate profits. However, stocks are also vulnerable to market swings and economic downturns. Gold and silver, as we discussed, are considered safe havens. They tend to hold their value or even appreciate during times of uncertainty. But they don't generate income or dividends like stocks. Their primary function is to preserve capital. The best approach? Diversification. Don't put all your eggs in one basket. A balanced portfolio should include a mix of assets, including stocks, bonds, real estate, and yes, even some gold and silver. They say history doesn't repeat, but it often rhymes. Looking at historical price charts of gold and silver can give us some clues about their future potential. Notice how gold and silver prices tend to rise during times of economic uncertainty, geopolitical turmoil, and high inflation. That's because investors flock to these safe haven assets when they lose faith in paper currencies and traditional markets. While past performance is not a guarantee of future results, understanding these historical trends can provide valuable insights for your investment decisions. The inverse dance. When stocks fall, metals rise. Here's a key concept to understand. Gold and silver often have an inverse relationship with the stock market. This means that when one goes up, the other tends to go down. It's a fascinating dynamic that has intrigued investors for decades. When stocks go up, gold and silver might go down, and vice versa. This inverse relationship is driven by various factors, including market sentiment, economic indicators, and geopolitical events. Why? It's all about investor psychology and the perception of risk. Investors tend to flock to stocks when they feel optimistic about the economy and future growth prospects. When the economy is strong and the stock market is booming, investors are confident and hungry for risk. They believe that stocks will provide higher returns, so they invest heavily in them. They pour money into stocks, pushing prices higher. This creates a positive feedback loop, where rising stock prices attract even more investment. Gold and silver, seen as safe havens, become less attractive. Investors prefer the potential high returns of stocks over the stability of precious metals. However, when the economy weakens and the stock market starts to decline, fear and uncertainty set in. Investors begin to worry about their stock investments and the potential for losses. Investors panic and sell their stocks, causing the market to fall further. This panic selling can lead to a sharp decline in stock prices, creating a bear market. They then seek safety in gold and silver, driving up demand and prices for these precious metals. Gold and silver are perceived as safe investments during times of economic turmoil. This inverse relationship is not always perfect, but it's a pattern that has played out over decades. Understanding this dynamic can help investors make more informed decisions during different market conditions. Which metal shines brighter? Gold and silver are often mentioned in the same breath, but they have distinct characteristics that make them unique investment opportunities. Gold is seen as the ultimate safe haven asset. It has a long and storied history as a store of value, dating back thousands of years. Investors flock to gold during times of geopolitical uncertainty, currency crises, and systemic risk in the financial system. Silver, on the other hand, is a more volatile metal. It has a lower price point than gold, making it more accessible to smaller investors. Silver also has industrial applications, which can impact its price based on economic activity. Ultimately, the choice between gold and silver depends on your individual investment goals, risk tolerance, and time horizon. Beyond price, The intrinsic value of precious metals. When considering gold and silver, it's important to look beyond the daily price fluctuations and recognize their intrinsic value. Unlike paper currencies which can be printed endlessly by governments, gold and silver are finite resources. Their supply is limited by what can be mined from the earth. This scarcity contributes to their enduring value. Moreover, gold and silver have inherent beauty and durability. They are used in jewelry, art, and even technology. This inherent demand further supports their value, regardless of economic conditions. So, should you invest in gold or silver right now? There is no one-size-fits-all answer. The decision depends on your individual circumstances, risk appetite, and financial goals. However, in today's uncertain economic climate marked by inflation, rising interest rates, and geopolitical instability, having a portion of your portfolio allocated to these precious metals can provide a valuable hedge against risk and a potential safe haven for your hard-earned capital. Remember, knowledge is power. Do your research, understand the risks and potential rewards, and make an informed decision that aligns with your overall investment strategy.